Hey folks, greetings and welcome to this conversation on CFO Chat. As always, any corporate action happens, you have your front row seat with the Chief Finance and Value Officer of the company right here giving you the lowdown of everything in the numbers. Safaricom, F24 numbers, earnings on steroids, crossing the $1 billion mark. I'm privileged as always to have Dilip with us. Dilip, welcome.
Thank you. And thank you for having me here. And it's always a pleasure to talk to you. So I wait for these occasions to talk to you for the results release.
Thank you, Dilip. It's always an honor to speak to you, man. Dilip, congratulations. Stellar set of earnings and heavy numbers you put out yesterday. When I look at your numbers, top line heavy, a bit thin on the bottom line, and that's where I'd like us to start. Your expenses are eroding the sauce that is at the top. And many of us are wondering, how would you push this going forward? Because your margins are really squeezed there.
I think the way to look at it is you separate Kenya and Ethiopia. Kenya is a mature business. Ethiopia is in investment phase. So let me start with Kenya first. As you have seen, a very broad-based growth story for Kenya. Starting from top line, 11.7% service revenue growth. Adjusted with MTR, impact was about 1.2 billion MTR impact because the reduction happened last year. It's 12.1% growth. So 12.1% growth in service revenue leading to a 16.6% growth in EBITDA, 20% growth in operating profit, or as we call that, earning before interest and tax, which is what the $1 billion mark that you're talking about, which you're very happy about. And then flows 13.7% to the net income. So if you look at Kenya's story, it's a very, very broad-based growth story. And within that, if you look at the top line profile, every segments have grown. So you could start with M-Pesa. Of course, we got benefited by the return to charging. But otherwise, as well, we have a very good run on M-Pesa. We had a very good run on connectivity business. I just want to talk about that as well. In the past, as you've seen, the voice revenue is coming down, but then that gets replaced by mobile data. Now, the way I tried to unpack this time is look at the total, voice, messaging and mobile data together. That has grown 6.2%. We never grown more than 3% in this area, 2.53%. So the reason I'm saying top line, very broad-based growth. Even on the cost side, if you look at Kenya side, I think we are quite okay. Although operating cost went up by 11%, mostly driven by energy cost. Despite solarizing and modernizing our power infrastructure by almost 25%, we still did not succeed in reducing or containing the energy cost. And that is what has led to 11% cost growth in Kenya. So, Kenya, very strong story. From top to bottom line, a double-digit growth. And it's broad-based, it's just not concentrated on M-Pesa. I'm sure you'd say, okay, M-Pesa has grown more than others. True, but it's not that others have not grown. Now coming to Ethiopia, very different flavor. Ethiopia is on an investment phase, and we spoke about that before, right? We have now, one milestone, I haven't spoken about it yesterday. Before you become an EBITDA positive business, there is something called contribution positive. At a direct cost level, you have your total revenue and you have a direct cost. Actually, Ethiopia turned contribution positive last year, which is also an important milestone towards coming to an EBITDA positive state. Yes, cost, as you see at the group level, the costs are growing because of Ethiopia. In a greenfield, in telecom greenfield of this size and magnitude, it is always you will be in a catch-up. That's what, a medium-term outlook we spoke about. We think 15 to 20 million customers when you reach at that stage, and about 4,000 plus base stations. We are now about 2,800. In terms of customers, say, give and take about 5 million customers, right? 5 million customers, 2,800 base stations. Customers reach to 10 to 15 million, and base stations about 4,000 is when really we get scale. So when you start getting scale, you will see that the growth in expenses will be much lower than the growth in the revenue. It's just the lead and the leg effect of Ethiopia, which is what showing up in the group performance. But another number I want to give it to you is, actually we have hit the bottom at the group level, in a sense that last year, I think one of the numbers that probably you would have picked up is what we say, the net income growth at a group level, excluding minority interest.
Yes,
that's
yes.
something I'm sure picked it up, grew by 1.2%.
Correct.
A growth, huh? Just see the last year's numbers. It was a 10.6% decline. So from a 10.6% decline, it has now moved to a positive trajectory.
Yeah.
So I think from a group perspective, you have to see this separately. Kenya, very strong. I mean, in all parameters, you have done very well. Ethiopia is beginning to now give the scale, and then at a group level, it will show up in the future as we progress on our Ethiopia journey.
Allow me to pivot on to that discussion on Ethiopia, because it looks like in F24, there must have been a significant change either in your strategy or your distribution model in that market. How has that evolved, and how did it play in the numbers we have just seen?
In any startup, there are phases. When you go, and it's a big startup, the level of investment you have seen, including license, as on FY24, we have already invested $1.86 billion as a consortium.
Yeah.
And that's not a small amount.
Yeah.
In just 2.5 years, right? Now, when you go there, and the only focus for you is that time is running out. People will not wait to talk. Yeah, it's not like you can decide to defer your decision of buying something, buying a nice cloth you can buy tomorrow, or a car.
Yeah.
But the need for communication is right there, so you can't wait. So that is what we are trying to, really beat the time, that how fast we can roll out. So that was the phase we call that as a rollout phase. Yeah. So the focus was that as many base stations as you can get. We have strong shareholders backing with the funding, so there is no problem at that. But what it does also, at times, there is a time, the second phase which comes in, then you say, okay, we have reached up to a point, now what do we do with that? And you have seen a change in CEO, and the previous CEO who left, and then we have gotten a new CEO now. He sat down, he joined in September. He sat down and thought, I think we have done an incredible job. Probably the fastest number of, I think he quoted a number, I think we are rolling out almost like 10-15 base stations per day.
Yeah.
That's not a small number. Said, if you are doing that intensity also leads to sometimes saying that question is, what do we do with those base stations? Are you monetizing? Are you leveraging? Are you going to the population where actually the opportunity exists? Or are you rolling out because just you have to roll out?
Yeah.
I think that's the pause or a refresh that was needed, and he did that. And then the distribution model needed to change there, because every market is different. Ethiopia is not just one country. Ethiopia is probably 6-7 countries within one country in terms of the culture, in terms of the customer behavior. So he refreshed the distribution model also to make sure that focused on what is important at that place, people who are more conversant with the local culture and the local languages. So, and that is what we gave him time, and he was actually working on that. When he went to Addis in February, we called all our investors, and that's when he came out with saying, it's a refresh.
Okay.
Yeah.
Okay.
Refresh in a way, we are still committed, and I'm saying fully committed to digitize the Ethiopian country. Yeah. To give our customers the best of the experience, and that is what we are committed to. And I'll talk about Ethiopia numbers also a little bit in detail, how that's showing up.
Yeah.
But what was required was a reset in the way we'd still be investing a lot of money. Yeah. But if you want to leverage the monetization and really the opportunity where it exists and the phasing of that, you just don't have to do everything at one go.
Yeah.
Nobody does the telecom. It is all about, you go step by step. We are still rolling out sites and despite covering the entire country, we still roll out 300, 400 base stations every year, even in Kenya, because you see opportunities and then you say, okay, this was left out. I need to do that now. We would not have done that 15 years back in Kenya.
Yeah.
Because you go step by step. I think that is the reset which has happened. And I was talking about the numbers. What we said, we are going to give Ethiopian Now, the Ethiopians, the experience of digital, the whole digital experience transformed the way, they experience the internet, right? That's what we have done. Our network is 2G, 3G, 4G ready. Every single base stations we roll out, it's 4G ready.
Yeah.
That is what is reflected also in our numbers. Just to give you one number, I think we had about 5.5 billion service revenue last year.
Yeah.
74% of that came from mobile
data.
And we are now started thinking, yes, I think voice doesn't, voice you need a community of interest. You need customer base for you to accelerate on voice, right? That's what we're doing. So voice will come in. But maybe the path that Ethiopia will take would be slightly different than what has happened in other telecom operators. Telecom operators always start with 20 years back, everybody started with voice.
True.
And messaging, and then it came 2G data, 3G data, 4G data. We are starting with 4G data, so we are on a different path. We don't have to repeat and do what we have done in other telecom operators. Yeah. So I think that's a significant step change in the way, do we know our potential customers, our target customers, and are we giving them what they need? And that's what I think OIM has brought in a change in distribution strategy, change in the way we roll out, and be very clear about where the opportunity exists. Of course, we have our coverage obligation, and we are very much committed to make sure that we meet our coverage obligation as well.
So Dilip, for the avoidance of doubts, what I'm hearing you say is that one, the distribution model in Ethiopia is fundamentally different from the one in Kenya. And secondly, you are a lot more conservative in terms of the coverage when it comes to rolling out of sites.
Yeah, I won't say coverage, I won't say conservative, I will say we are far more focused in the way we want to. We will cover everything, but we want to go step by step in a way that you can monetize and you can leverage the investments that you are making. Mm-hmm. And that phase of initial rollout phase was obviously if you don't have a community of interest of base stations, customers are not, where are they going to talk, right? If you have to talk to someone, you need the other customers also to have the connectivity, right? So when you rolled out, we were not necessarily very focused on this, and that's where that's how the telecom operators work. But as you now expand, you want to make sure that you are going in the way where the opportunity exists and you leverage that.
When you look at that market, would you say you are hyperscaling? And why I'm asking that question is I want to get a sense of where you are by way of market share.
See, one of the things in Ethiopia which is still not available is the industry data which is publicly shared, or the ECA, the Ethiopian Communication Authority, don't publish any numbers like what you have in Kenya. You can see the numbers in December here, and you'll see everybody's, because remember the regulators are new, and we had only one operator. At some point in time, definitely this will come in. So there are reported, Ethiotel reports numbers, and we also have our numbers. So Ethiotel reported numbers, the latest is not available, but from where we believe that we are making good progress on that. Because it's not a publicly available information, I really don't want to comment what percentage of market share we have. But market is very big. Yeah. So I think the way to look at it is that the country, give and take, I think our competitor reports about 60 to 65 million customers. Just to give you statistics, most of the countries who have gone liberalized their telecom, the total customer base is higher than the population, because typically you will have one more SIM, right? Yes. You want to use double SIM. So 120 million population, there is no way, we can check this number after 10 years, you'll see that actual customer base will cross 120 million. And today, give and take, I don't know, the numbers are around 60 to 65 million, that's what for the industry as a whole. So it's going to double. So it's not necessarily, market share growth also comes from the people who are not using today. And if even by the numbers, the penetration is very low. From a SIM penetration is about 50%, 60%, as opposed to Kenya, we are at about 120%. So that's the contrast you have to think about. So market share, I think we are making very good progress. The numbers are not necessarily available, so I can't really quote a number for you.
It looks to me like in the F24, there was a trade-off in terms of pricing and volume, which seemed to have paid off for Safaricom. So your data price was down, Your voice price was down. Of course, we reinstated M-Pesa to bank transfers, but the tariff was revised downwards. But still, you pulled out some solid numbers. Just give us some color around how that play out between volume and price came out.
There are three numbers that I spoke about. Voice price in last 4 years are down by 60%. The realized rate, effective blended voice rate that you realize from all our customers is down by 60% in 4 years. Data price is down by 40%. And when we reintroduced wallet to bank and bank to wallet charges, we optimized our pricing by 61%. But what we see is the elasticity. I mean, these are the markets where, while mobile data is expanding, we still have huge opportunities to grow. We are not seeing a usage decline in voice. So voice usage actually has grown by 10-15% on year-on-year basis. So which means that there is always an opportunity for you to find that people generally use more if you're optimizing price, right? So that's the balancing you try to do. And it has paid off. It has paid off for our, if you remember when we reintroduced the charges for the person-to-person payment, remember that was up to 1,000 shilling was free. Yeah. We reduced our prices by 50%. But that segment of revenue continues to grow. And in fact, in the last financial year, it grew 15%. Just that payments segment. So this just confirms, I think there is a way the customers respond to affordability and you value you provide. The way you do it is that you are not necessarily reducing prices in that you are not changing headline prices, but you give more resources. So that way, customers say, I'm getting more from the same price.
We had the reinstatement of the bank to mobile wallet in the reverse in terms of tariffs, and I'm curious as to the quantum impact this had on the numbers.
So this revenue lines before the COVID relief, which made it free, was around anything between 2.7 to 3 billion shilling. Yeah? Now, if you recall, during the COVID period, this was made free. So deposit volume just absolutely ballooned. Yeah. I think in this period, deposit volume went up by anything above 250 to 300%. Because what happened is we don't charge customers for deposit.
Yeah.
But we became the largest collection point for all businesses, small, medium business, because with 260,000 agents, you technically can just come maybe 500 meters from your home, you can go and deposit your money. Yeah. Now, deposit of money was free. Because now go from the wallet to the bank is also free, so you suddenly found a use case saying, I don't want to go to the bank.
Why not just
put the money to the agents and move it to the bank, right?
Yeah.
And same thing, it was happening the reverse way. So when the volume went up, and you remember I spoke about 61% price optimization or reintroduced,
yeah.
Of course volume went down. Even with 61% reduction in prices, actually the revenue line is higher. The amount is around anything between 3.5 to 3.7 billion. So from a 2.7 to 3 billion
yeah.
pre-COVID or pre-relief to this, 3 point. But what it does is that, there is much more velocity. The volume is much bigger, much broader than it was before. Mm-hmm. So even if you could technically say it's not necessarily grown significantly, it brought back the revenue which we didn't have it, but it also allows the size of that money, the velocity within the ecosystem is much bigger than it was before, which also allows then more monetization opportunity within the M-Pesa ecosystem.
And on the monetization within the M-Pesa system, how are you seeing the numbers play between the consumer payments on the one hand and the business-related payments on the other hand? And I'm asking specifically around the business-related payments because in the recent past, we have seen this trend, at least from our own analysis in the media, around you go to a place and they're telling you pay cash for obvious reasons because of the trend we have seen around taxation. So how is that piece of the pie looking like, consumer versus business?
Yeah, numbers don't lie. Yeah, so as much as probably what you have seen, but we have one revenue line item which is Lipan M-Pesa, LNM merchants, the revenue has grown by 38% year over year, which means that even though the number of merchants have not grown as much as actually we accelerated the merchants growth by almost 100% during the COVID period. And then it was growing, but the pace of growth has slowed down. Yeah. We still believe there is opportunity. And I don't want to comment on the tax part, but the fact is that the fact is that the revenue is growing, and we haven't necessarily, the monetization please remains same. In terms of the monetization, the consumer payments monetization is higher than the merchant payments. Because merchant is where you want to grow, you want to expand the merchant base. You have seen another numbers that we started showing up, Pochila Biashara. We spoke about this before, but that's becoming, you almost have a merchants who, like their requirements of the KYC, the documentation, the process it takes, and you have a merchants which are like quite credible merchants that they're not going to go away from there. They are the one using, say for example, LNM merchants still. Yeah. But the one, if you see many of those in a fresh market or on the street who are selling bananas or vegetables and all, they don't need to have that level of. So what we introduced, I think it was four years back, called Pochila Biashara, where your business part and your personal part you can differentiate. Yes. That is growing. That number has doubled. So there is more and more of them, and there is also a bit of an incentive. There is something that you haven't picked up probably is almost 50% of our M-Pesa transaction is actually not chargeable. I don't want to miss that, because this is also something that we are encouraging when the introduction of charges happened, but we made up to 100 shilling P2P transfer and 200 shilling in merchant payments free. Yeah, so that is what is driving the Pochila Biashara merchants there, because they are the merchants, so up to 200 is free. So actually that's driving a lot of customers into them saying it doesn't cost anything to the customer. Yeah. If you're buying vegetables for less than 200, you are not paying. 2 or 3 or 5 bananas is not going to cost you that much. Yeah. So that's driving. But what it does is that, first of all, the affordability part, the people who really need, if you are on a matatu and all, if you are paying less than 200 or you're paying less than 100, it's not chargeable. So I think the merchant side, there is one story which is on Pochila Biashara, which is doubled in this financial year. And the number of merchants is growing, but not at the pace it was growing before. But there is much more adoption, more transactions, more values are happening in the merchant side, and that's what has led to a 38% growth in merchants.
Interesting. And still on M-Pesa, there's a slide you introduced this time on the M-Pesa take rate. Just explain this to us, please.
It's very simple. What it does is, the M-Pesa is all about the values and volumes, right? The transactions values, transaction volumes, and the velocity within the ecosystem, right? So for each transactions which happen, what is for all transactions or for the chargeable transactions, everybody would like to see, what is the level of monetization? What is your revenue per transactions? And then you divide it by the value of average value per transactions. That's what you get. Take rate. Yeah, it's very simple. Calling it take rate, but the calculation is very simple. You divide your revenue per transactions and by the average value of the transactions. Now, if you would have seen historically, because we are affordability is something that we are working a lot more, in terms of the price optimization that we have done. So you will see a declining take rate. Yeah. Now, so what we have done in this time is that we are showing of all chargeable transactions, what is the take rate, and only the chargeable transactions. As I said, 50% of the transactions are not charged. So you also want to see the transactions that you're charging, what is the take rate. So it's quite simple, and on overall transactions, our take rate is 0.35, or as you can 35 basis points. Yeah. And on the chargeable transactions is about 65 basis points. It's very easy to calculate from the numbers that we produce, but we get a lot of questions around this. We thought that maybe we're just being upfront about it. But one thing I want to tell you is that it is on a decline. Yeah. Because the M-Pesa is all about values and the volumes, the transactions. And that's what we have been growing. I mean, if you've seen our numbers, our chargeable transactions year over year is growing, 45-50%. The values and the volumes almost close to that. Yeah. So But what is our revenue growth? If you just compare, if you want to see, if you want to keep a similar comparison with say mobile data, if you suppose your mobile data usage is growing by say 30% and you are growing say 20%. So you are saying on a growth of 30%, your revenue growth is 20%. This is something similar.
Yeah.
That what's your volume growth and what is your revenue growth? So you always see that will be much higher. The volume growth will be much higher than the revenue growth, because that's what tells. Because as you are expanding more and more volumes, your rate of monetization go down. And in the platform play that we have, where we are, in conjunction with the banks, all the credit products that we have, the rate of monetization is very low. Similarly, for merchant payments, the L&M, rate of monetization are very low. But these are large volume transactions that happen. So you can still grow your revenue, but at a lower take rate.
I want to close the M-Pesa conversation with two questions. One is, I think it was in August last year where we saw the M-Pesa limits being bumped up, mobile money limits actually across the industry. And I'm just curious as to your take on how this has impacted the industry. And secondly, Dilip, you and I have had this conversation before. M-Pesa is increasingly taking a larger piece of your service revenue, currently at about 42%, which is not small, considering it's really an add-on, if I could call it. As management, do you have what you would call a sweet spot here, where you say, if we hit this proportion, then perhaps we should think about how to also equally grow the other remaining revenue lines so we don't have concentration on M-Pesa?
So different stakeholders look at Safaricom differently. Yeah, on a lighter note, some of the stake or investors or analysts could say, are you a telecom with fintech, or are you a fintech with telecom? Right? I think the way we are looking at, we remain steadfast on our what is our vision. So our vision is to become a purpose-led technology company. Yeah, which basically says technology is driving customer solutions for everything customers does. Yeah, so that's what, and of course purpose is at the core of everything that we do. So we have enhanced it. We are saying we want to become Africa's leading purpose-led technology company. So it's just not about Kenya or East Africa. We want to be in that space. Yeah. So when you talk about that, it's just a natural process of how is technology driving what customer needs, and technology supporting and solving customer problems, right? So if you are in that space, it's just a natural process of what customers like it. So we are not necessarily saying that, we have a target. Some people ask, do you have a target for M-Pesa to be a certain percentage of your revenue? We said, no, we don't have target for any of this. Okay. I think it's all driven by the customer needs and customer demands. As a company, are we able to enable that to happen? If M-Pesa is 42% of the revenue today, it's just a reflection of that. We probably have been successful in providing or solving customer problems in the way customers could relate to us. It's all about customers. It has nothing to do with us. And I can confirm you, as a management, as a board, we don't have a target. Let's take now M-Pesa target to 60% of the revenue. No, we don't have such target. It's just the natural evolution of how things are happening. And one of the reasons why it's high is also the voice and messaging revenue, which has contributed everything of Safaricom at some point in time, right? It's not anymore, right? Yes. It's on a decline. So it's also a function of, you see certain revenue which is not in necessarily, it's just a global trend that is replaced by something else. So it's just that it's happening. There is no deliberate and there is no concentration risk of there. It's just what the reality.
Interestingly, messaging revenue went up. I saw that line item and I actually laughed when I saw it.
One thing for sure, that you don't miss out anything in that presentation. Actually, it is the second year in a row. 3 years back, every single year messaging revenue was in decline. Yeah. And one of the things, and I have been very vocal about it, this whole OTT-led messaging solution should have come from telecom operators long back. Yeah. So you left a customer needs unfulfilled, and then you suddenly see all these telegrams of the world or the messengers of the world became very popular because it's so easy, right? Ideally, I've been in telecom for 20 years and I have seen the evolution. I say this telecom companies should have been at the forefront of that, how the social messaging thing, right? But anyway, that's what for the past. Then when you are sitting back and you're looking at what's happening globally and what's happening within our, the African markets, including Vodacom, it's just declining. So question is, do you want to sit there and just see it's falling down, or you want to do something about it? So the team actually came out with saying, it's not necessarily, because you have invested already, you are not investing a lot more in this area. So you look at your return profile of, could you actually bring down the price? Or are you able to enable customers to use more and more of messaging? As the bundle services, you give unlimited, you give hourly offer, you give daily offer, to a point saying you can use as many messages as you want. So I think there has been a shift in the way we were thinking about. In some telcos, they kept it very high, because they were thinking, no, this revenue line is going down. We need to keep the price very high so that we can protect the revenue. We took a very different trajectory on this, and I talked about voice as well. We have been reducing prices. Same thing what we have done for messaging. We reduced prices. We offered more bundle opportunities, where if you're buying a voice bundle, some of those bundles you can use as many unlimited messaging. So you give that option to the customers to decide. We love social messaging because that's part of data, but let customers decide, and not necessarily, leading it to a natural. Let's have its natural death and not kill it before it is even. It's still growing, and I'm amazed to see. This is second consecutive year where we're growing our messaging revenue.
I was equally, taken aback by it. Congratulations on that. Dilip, I was looking at your finance costs, and I looked back to our November conversation, and I was like, thank heavens you extinguished your FX hard currency debt. Never mind, you still took a hit from the domestic market because of where the yields are. But I'm curious as to going forward, how you intend to play around that space.
I think it was very clear to us that the currency, the way it was expected to go, so we have to reduce the exposure. We took $120 million, though it was domestic. But we said, no, we can't wait for 5 years, which was the period of that. So we decided to extinguish it. And in fact, we started paying off even our domestic, for the license, we had to take a significant loan for debt, raise money from here. And so I think it was deliberate. And things which we could not avoid, and which is what I also called out yesterday, is the interest rate, as you also mentioning about. It's just not in our hand. But what we're trying to do is, you have seen us raising money through the sustainability linked loan, and that's something that we're very passionate about. That area, ESG is a very important part of Safaricom's what we are trying to do. So the sustainability linked loan also allowed us to link our performance in ESG to the rate of interest that they will charge. So of course, if you perform better, your rate of interest could be lower. So you are looking at every single opportunity to see where you can reduce your interest cost. But we could not, this is something not in our hand, but we tried to do is what was in our hand. Take out the forex exposure, zero. We don't have any dollar denominated loan end of financial year 24. And also our debt levels are similar. And we've seen whatever was there last year. Incrementally, we haven't taken much debt. That's also reflected, I think, our net debt to EBITDA, which is a very important parameter as the health of the business, how much EBITDA you're generating, what's your debt. Because we've grown our EBITDA 16.6%, and you can see that our actual net debt to EBITDA has gone down from 0.4 to 0.3. In an environment and where you're still investing in Ethiopia. So you're right, that's something that we are still keeping a very, very close eye on the interest rate development, which has grown by almost 40%. You saw our interest cost has almost grown by 40% year over year.
Tight situation for, I think, every business operating in this landscape. Fuliza, quite interesting numbers there. Maybe not surprised given the sort of tariff adjustments we saw, but maybe just paint for us a picture how you intend to go forward with Fuliza.
The way I tried to unpack this segment of the business, which is credit-led business, which is Fuliza and the other, I'm sure in other credit products that we work with the banks. So interestingly, outside of Fuliza, the growth in those are material, in the context of, if you go back historically, these other two segments were not necessarily growing in the past.
Yeah.
But with the more refined credit scoring model for the customers and more refresh of the limit and the work, we work very closely with the banks, we managed to grow the other side. So although that profile is showing a decline, but if you take out the Fuliza, actually have grown and grown substantially. I think 20% plus growth in those areas. Now on Fuliza, there are two things I want to say. One is the price optimization was material and it was needed.
Yeah.
And it was needed. And we also fundamentally changed the structure of the product in a way, working with the bank, which allows to treat this product an overdraft product, not like customers use it, take it, and then they don't pay, and they treat it like a term loan. So that's why we made, okay, there is a small fee when you take the debt, but then you have a free period. If you pay within this period, you are not charged anything.
Yeah.
Because we are encouraging customers that you pay, because this is an overdraft that you are taking, you don't have to extend. I think that's also changing the behavior. So customers are also optimizing. You get what I'm saying?
Yeah.
If you are not charged for that 3 to 5 days, I would like to pay back.
Sure.
And then take one more time, because the fee at the beginning is very low. So the two things which has happened, the price optimization that we have done, significant, and also the customer behavior, which is good, because if you see the disbursement on Fuliza actually grown by 20%. That's not a small amount, and the size
and it's huge numbers.
Yeah, it's a huge number.
Yeah.
You see the total disbursement. It's
Correct.
a huge number. Yeah, some 800 plus billion, right? So, and that's grown by 20%. I think it's serving its purpose of make it affordable, and as you know, it's very emotional in terms of what was Fuliza price is very high. So I think what we did was right, and as a management, we are satisfied that more disbursement and customers find it more affordable, and we want to actually expand to more and more customers base in this segment.
There was a lot of expectation given the numbers you put out, and then we see that the dividend has been retained, the full year dividend for that matter. From my part, I think I understand, given the sort of investments you're undertaking, especially in Ethiopia. But maybe just give us a lot more context around how you went about that decision, because the market was really anticipating something a lot larger.
Dividend is emotional, and we knew when we were going to Ethiopia, because we pay, so our dividend policy is very clear. You pay 80% of your net income at a group level, yeah? And when you do that, we adjust net income for Ethiopia. For example, Ethiopia, we adjust minority interest and then we pay dividend on that. The reason it stayed flat is because if you look at that number, 63 billion, it pretty much remained flat year over year, right? So we actually are paying as per dividend policy. It's just that numbers are similar, yeah. I think in a phase where we are very clear in the beginning when we were going to Ethiopia, and the shareholders, whether the major shareholders or the retail shareholders or the investor and analyst, when you are talking, you are very, very, very categorical. We are not changing our dividend policy, paying 80% of net income, but what we are changing or make it evident that we will now consolidate Ethiopia, and that will impact dividend in the short term. But as Ethiopia picks up its momentum and the growth, then you start gaining the benefit of it from Ethiopia's perspective. So to that extent, it's not a surprise. It was expected, and we actually prepared our investors saying dividend, absolute dividend is expected to go down because of the policy that we have not changed. And that policy, I think it's a good policy, because you are in investment phase and you want to invest. End of the day, what remains is the return earnings for the for the shareholders, right? So that doesn't go away; it's visible, and we can see that our return earnings at the end of last financial year is just staggering. 171 billion shilling, if I'm not mistaken, that number, 171 billion shilling, and how much dividend we are paying? 48 billion. Yeah. So because that also is the strength of the balance sheet, that you're keeping a strong balance sheet with your return earnings and allows you to invest more. We haven't changed the dividend policy. It's just that number happens to be same compared to last year and what we have this year.
I see. One other thing which, of course, stood out in this earnings is that you gave revised guidance, which again you exceeded. And whereas I'm one of those who believes that F25 guidance is quite aggressive, I'm just wondering, when you look into F25, don't you think some of the numbers you're given are really, really aggressive in terms of expectation?
A guidance is a process, you go through. Typically, you do a lot of due diligence in the way you try and come to that number, and that's why guidance is always a range, right? Now, what have we spoken about in our medium-term outlook? If you have seen that slide, what Peter spoke about yesterday, we are talking about a growth momentum in Kenya. Some of the areas that we really, you can start seeing that we are gaining the benefit of all the hard work that we have put in, right? So from that context, you do all permutation and combination, and then you paint a picture where is likely to be the next year. So it works both ways, One of the things as a CFO, which, in my early days, one of the things that the investors and analysts have taught me, sometimes, doing better than guidance is also not good, because then you have not prepared the investors and analyst community. Oh, you could have given a better guidance. And last year, I got a lot of pushback actually when the first guidance came in, saying, we don't see a growth ambition.
Yeah.
So it's not that is driving the guidance of this year. But I think one of the learning that we had last year was that in the beginning of the year, there was a lot more uncertainty. It's not that we don't have uncertainty or macroeconomic things have materially changed. But if you look at some of the positive green shoots in terms of, let's accept it, inflation is much lower than it was.
Yes. Yeah.
You see currency, FX have materially changed when we were discussing last year versus this year. GDP growth last year, around the same time, the year-over-year quarterly numbers that you see, it was about 3.7%. So from a peaking to a 10% quarterly number, it came down to 3.7%. And it has now, I think the quarter number that I have seen is about 5.96%, expected to cross even 6%. So there is optimism, but at the same time, there are quite a few factors that you take into account, including the recent flood. It is such a moment for us to ponder in terms of, and Peter spoke about that yesterday in the investor days. So there are long-term impacts that also come. There's a rebuilding, and there's so much of damage which has happened. I think that part is something, there was a question also asked yesterday, have you taken that into account? It's very difficult at this stage, yeah. But you take, nobody, we are not what you call, we can't predict future in the way, but you take a view about what are the headwinds and what are the tailwinds. I can tell you, I think we are facing more headwinds last year compared to what we are facing today in the overall context. Ethiopia, as I explained to you, there is a plan and a refresh, a restart, a scaling up operations, and Kenya has done extremely well last year, and we see the momentum going into this year as well. So with all of this, I think we are quite confident at this stage that the guidance reflects what we are going to achieve.
Okay. There's a question I asked, and I think you missed it. The bump up in the M-Pesa limits we saw in August last year.
Oh yeah, I missed that.
Yeah,
I missed that.
I don't know what you've seen in terms of the impact of that.
This is, from a consumer, the individual consumer, it doesn't make a lot of difference, because your average transactions are much lower. You don't need that limit, or you don't need that level of balance. But what it does impact is the small, medium enterprises, right? I think it's absolutely a step in the right direction. In my view, at some point in time, with all the checks and balances and controls put in place by central bank central bank, and with all anti-money laundering and all this stuff putting in, when you have that confidence, to my mind, there should not be any limit. And it should be exactly same the way you do with the banking transactions, whatever the limit comes in, because the risk remains similar. I think this is absolutely a step in the right direction. So we of course we see more adoption by more and more what you call the small medium enterprises. The actual effect of that is something that yet to be seen in the way materially. Has it materially changed the way the profile of the volumes and values in the business? I think it's still within the overall expectation. Maybe it will show up in the future, but it's absolutely a step in the right direction.
Ethiopia is setting up its capital markets. and at least to the best of my knowledge, is due for launch in Q3 this year. And I'm curious, does Safaricom see any opportunities going that route? To the best of my knowledge, I've been informed that the first company going public will be Ethiopian. Would you see any opportunities there?
I think this is a great opportunity for, first of all, for the country to develop the capital markets, yeah, which is there is a lot of positivity around that. When we were in Addis in February, we spoke to the stakeholders, and I think we're also beginning to get that confidence that it's going in the right direction, and there has been substantial work done in this space. And of course, you are not Ethiotel in terms of, and Ethiotel is a profitable company. So
Yeah.
Obviously you have focused today to make sure that this company is scaled up at some point in time. And these are opportunities. You not, I mean, in the way everybody wants to localize the business. Yeah. So when you list in local markets, which allows then the capital building opportunity for everybody in the country, right? That's what it has happened in many countries, including in Kenya. So we are watching that space very, very closely, and something that we would be very keen at an appropriate time as far as the listing is concerned. But what I also picked up is the other part, you know, for example, the bond, you know, the bond market. It's something new for that country, right? So that's something would be very much interesting. We have to raise a lot more local currency, yeah. So the any opportunity which allows us to raise money through the bonds, local currency bonds, is something that would be very, very keen. And we actually have been in touch, in discussion with them, to be able to see in terms of timeline and when this comes to a place. Maybe this is one space that you can watch out very closely, that as and when it happens, we are interested, and we want to evaluate and see whether that works for us or not.
Okay. Do you have any indication of the ticket size you would want in the local currency denominated bond, that side?
I can't necessarily give you a size, but I think our needs, I mean, it could be anything between in the range of $100 to $150 million equivalent.
Okay.
Yeah. So we have not finalized the number, but depending on, you know, the future needs of that, I think we see an opportunity between $100 to $150 million equivalent of local bond over a period of time, not necessarily at one go.
Okay.
But that's what the opportunity is.
Dilip Pal, always a pleasure speaking to you, man.
Thank you so much, and thank you for having me with you.
Thank you. We have been having a conversation with the Chief Finance Officer of Safaricom, the biggest entity this side of the world, and we have been focusing on F24 numbers. We shall be bringing you any other corporate actions as they happen, so stay tuned.